The situation in Venezuela is not anything particularly new. This has been going on now for years. We've seen a gradual decline from 3 to 4 million barrels a day now to something just over 1 million barrels a day. So the market is well used to declining production from Venezuela, declining supply, and had anticipated that 2019 would bring more of the same, irrespective of whether there were sanctions or not. Frankly, I was a bit surprised that with the speed at which sanctions were brought in overnight. But the question, what are those sanctions? Venezuela can still sell the oil, it just can't sell it to U.S. refineries. It can continue to sell oil to their own refineries, the Citgo refineries in the U.S., which supply largely on a barter basis. So they don't take cash for their oil, they take petroleum products and bring it back to Venezuela. From what I understand, that trade is not restricted. So that accounts for, I believe, about half of the production going through the U.S. Gulf Coast refineries from Venezuela. So there are sanctions and then there are sanctions. And that probably goes a long way to explain why the markets were somewhat moot in their response to the sanctions that were brought on overnight. So long answer to your question, Emily, which is, there will be short-term impacts, probably more so if there was a military intervention rather than these economic and political sanctions that we currently see.
Now, we see various countries siding with the two presidents that are in Venezuela. But I want to ask you about Venezuela's importance in OPEC, because in 2019, they are now the chair, with the different countries siding with, we got Maduro on one side and Guaido on the other side, and various countries backing these two presidents of Venezuela. What will that do to OPEC and its mandate?
OPEC has a big problem. And if we can take it out of the context of what's going on right now on a daily basis and even on a monthly basis, let's look out 5 years. I've seen some forecasts that has U.S. production heading to the neighborhood of 20 million barrels a day. So forget about OPEC cutting an extra 100,000 barrels a day next year, which the Saudi oil minister has said that they'll move in that direction in February. What are they going to do in 2024, 2025 if the U.S. continues to increase shale production and that oil is available for the world market for export? OPEC can't cut that amount of production. It simply can't. So the answer has to be lower oil prices. You can't cut your way to price stability and higher prices. Eventually, an equilibrium has to be reached, and that equilibrium will occur at oil prices, arguably, that are substantially below where we are today. That fundamentally is the problem that OPEC has to deal with in the medium term, not even in the long term.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.